One of the reasons that I have come to, I would not say hate. I think hate is a strong word. But one thing that I really dislike, that I have come to notice over 2 or 3 years of investing, is that I really dislike the agenda or the investment of trying to invest in dividends. I have come to realize that way the hard way because I have done some back testing of my investment over the years, and by 100%. Remember, I started investing around when it was almost all time high around the pandemic. I started investing around that time. And when I learned about dividend investing, I liked the idea. Remember, I was oblivious of the stock market and I started investing in the idea of you buy a share of a company, and if that company pays a dividend, then you know you invest back that dividend, and the snowball effect starts happening, and at the same time companies raise their dividends. I like the idea. In a perfect world, that idea works, but we do not live in a perfect world. If I had just put all my money in the S&P 500 since I started investing, I would have more money, a bigger total return than trying to invest in dividend stocks. And I did a lot of mistakes. You named them. I bought AT&T, and you look how AT&T is right now. They even cut their dividends. I invested in AGNC. It's a REIT company. It was a horrible investment. I invested in realty income. I still have some realty income. I'm at a loss right now, so I don't want like buy high, sell low, and it could go back up because we do not know. I don't have a crystal ball about the stock market. It can go back up, but please, guys, please don't believe the hype. And I dislike dividend investing because how do they pay those dividends? Those dividends do not come out from from thin air. Those dividends, they come out from profit. And what is profit? And who pays that profit? The consumers. In able to generate more profit year after year, they have to increase their product, right? Their item all across the market. And by increasing prices of the items, then they are able to increase these dividends. So to me, that's not capitalism. It's another word, but it's not capitalism. Remember, capitalism is to have the best company, producing stuff for cheap, like things that are not too expensive. That's why you have all these companies competing, like growth companies, competing with each other because they want a profit, but they don't want the like a profit at the expense of the consumer. So they start building new products and cheaper products. So to me, that's true capitalism. When companies monopoly the market, to me, that's not capitalism at all. That's the reason that I buy the S&P 500, because I even though like these stocks, like hello Ivan, but these stocks are in the S&P 500. So my moral stand is, even though it's in the S&P 500, I'm buying the fund, right? I'm not buying individual stocks. I'm buying the entire market, and I don't have to worry if Visa or McDonald's and all this nonsense increase their dividends. Because if you go to McDonald's, look how pricing, how expensive they have gotten over the years. So that's why they're able to pay those nice dividends, like oh, they increase it by 10% or 8% year over year. Blah 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 blah. None of that stuff. To me, that's not capitalism. Okay, in the S&P 500, it's a true capitalist ETF, because if a company is not making a profit, or not just profit but growing, and again, the point about growing like this company is because they are creating stuff, and at the same time it's for cheap. That's my 2 cents about this. I buy the whole fund. If a company's there, I don't have to worry about Pfizer, Realty Income, Coca-Cola, Pepsi Cola, like the top dogs, the dividend kings and the dividend aristocrats, and none. I don't have to worry about none of that stuff because I'm buying the fund, and if the company is not working, if the company is not producing, or and another company takes that company out of the fund, then you don't have to worry about that, companies come and go. I just hate the ideology that, hey, I'm investing in this company because they have paying dividends for X amount of years. I mean, it's a good idea in a perfect world, but not in my world. With the S&P 500, I don't care if, if I get a 10% return out of a one company, and I don't have to about Tesla. If I have about Tesla, like put a ton of money into Tesla a few years ago, right? And look at it now. Now it's not even in the top 10 companies in the S&P 500. So even though it's still in the fund, but lower in the ladder, okay, but I don't have to worry about Tesla, whether Tesla is selling or if it's not selling, if it's making a profit or if it's not making a profit, if it's not paying a dividend or if it's paying a dividend, if it's increasing the dividend or the dividend has stagnating. I don't have to worry about none of that stuff. So just put all your money in the S&P 500. That's my opinion. Put your hard-earned money, because the S&P 500 is not about just about peanut. Even though it pays a dividend, I welcome it. The S&P 500, it's wealth preservation. The S&P 500 really, really, really preserves your wealth. When you get a higher dividend yield, you get tax on it, and you don't want to pay tax. You don't want to give your money out to the government so they could do things that you do not agree with. You pay your lower tax, you get the total return. You do not leave money on the table. The thing is that you have to weigh that immediate gratification. Putting your money into dividends, right? You are getting that immediate gratification. That's why you do not get the total return. You forfeit the total return for dividends when you can just invest in the S&P 500 over a long period of time. You're gonna get the nice juicy total return, and it's the best kind of return because you're not leaving money on the table. You are putting all your money back into your pocket. The perfect total return. So that's my 2 cents, and this is what I'm feeling. So and I'll take this to the ground. I take this to the ground. Do not just invest in a company because it pays a dividend or because it has increased its dividend. You will have a better total return if you just invest in the S&P 500. And for me, that is SPLG. SPLG. It has a. I used to. I wanted to buy VOO or SPLG. It's the same thing as VOO. It has a lower expense ratio. It has given the same amount of return. It's essentially the same fund, just from State Street, if I'm not mistaken, the company's name, from State Street, not from Vanguard, and their expenses 0.02% for every $1,000. For every 10,000, you're just gonna pay $2. For a million, you're gonna pay $200. When you invest in VOO, if you have $1 million invested, you'll end up paying about $300, which is like $100 extra. For you, it might not be a big deal, but I could do a lot of stuff with an extra $100 in my pocket. Thank you so much. This is Ivan Stocks Talks, and thank you so much. This is Ivan Stock Talks, and if you like the video, if you found it helpful, and if you don't have to agree with me, but let's talk about this because this is very important. I don't want to mislead people. Okay, so if you haven't subscribed, please do. And if you have subscribed, I thank you from the bottom of my heart. Thank you for helping me grow this channel. When you subscribe, it gives a positive feedback, and when you like it or comment and whatnot, it gives me a positive feedback of uploading more videos like this. Um, Knowing that I'm not alone in this, that I am in this with more people, more human beings. And if you do not agree with me, it's okay. You say, hey, I want to invest in dividend stocks because I'm retiring and stuff like that. Okay, I respect your investment, your thought process. I truly respect it. Okay, this is not just a one-way street, but for me, it is. The S&P 500 gives you the total return. You can back test it if you want. Thank you so much, and I see you on the next SCH. Oh my God, I see you on the next Ivan Stock Talks. Thank you so much. I love you guys. Bye.